Good morning, pre-market prep. I hope everyone is having a good Tuesday. It is October 28th, 2025. So much news here this morning, folks. We are in the heart of earnings season, and on top of that, getting macro updates from Trump, getting updates on the job cut front. Couple of highlights here, earnings that we're going to make sure to go over: SoFi, UPS, Royal Caribbean, Wayfair. We're going to preview earnings for tonight and tomorrow. A large deal between Skyworks and Corvo, folks, combining in a $22 billion deal. PayPal shares rallying here this morning on a partnership with OpenAI for instant checkout. We do have a deal for CEPT to DSPAC. They are going to turn into Securitize with a $1.2 billion valuation. Lots of news here this morning and a couple of great guests. We're going to have a little extended pre-market prep episode here this morning. Our first guest at 8:35 a.m., Danny Kirsch. He is head of options over at Piper Sandler. And then a little extended interview here, folks, at 9 a.m. with Eric Jackson from EMJ Capital. We're going to check in with Eric and see how he has been doing on some of his recent investments, including Open Door, Better. We're going to get to that in just a sec, folks. Pre-market prep begins now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, I'm going to do my best impersonation of Joel here. S&P 500 futures trading up under 0.1%. That's about 4 points, 69.12.5. Take a real quick look at the Qs here. Qs trading around the 628.09 level. Quick look at crude oil. Crude oil here this morning trading just over the $60 per barrel level, 60.58 per barrel. Gold down from that recent high, just under 4,400, under the 4,000 level, 39.40.90 per ounce. I think it's time to bring in Triple D, ladies and gentlemen.
What's
Triple
going
D.
on? What's going on?
Good morning. What's up? How you doing? How's your morning?
It was a long night. Did anybody watch that baseball game last night? I quit. I couldn't. It's 18 innings.
You quit? 18
Yeah,
innings. I know. What time did the game end?
Good question. I went to bed.
Like 2 in the morning?
At midnight, just after midnight. I was like, this is just settling in here. Too long of settling in, so it makes for a late night. So, and obviously, I'm a Tigers fan, so not as much skin in the game being a Tigers fan, but it's interesting to watch. So, anyways, I don't know. Anybody know what time it ended? Time ended. We could ask Google. Ball game.
Google will know.
Had to be like 3 in the morning. Donald.
3 a.m. Wowza.
Yeah, be a long night. That was a long.
And then they have a game today, right?
Yeah. They play again today. So
oh my lordy.
We played 3 games basically in 24 hours because that's another extra game up to 18 innings. So crazy.
Well,
big moves.
That's playoff baseball.
It is. And we got big moves in the stock market, though. A lot of earnings. There's over 1,000 companies reporting this week. So we have a pile of companies that are reporting here. Obviously, headlined by Wednesday, going to get Microsoft, Meta, and Google, and Thursday, Amazon, Apple. But we got some last night. Last night, kind of quiet. NXPI would have been the headliner for last night. And it's up $4. We're not going to go into all these in details. If you have a specific stock that you want to talk about, let us know. When this many companies reporting, we obviously can't cover everything. Celestica was probably your big winner last night. CLS, maybe we'll just jump into that one from last night. That's up over 32 points. Brentster, if you do have the earnings, stock is at an all-time high. This company, Canadian company actually, is just been flying here. $10 a share in 2023 is now $333. Celestica's went full AI.
Strong report, actually really strong report. Q3 adjusted earnings 158 beats the 147 estimate. Sales also beating just under 3.2 billion. Analysts were around 3 billion. They raised both their 2025 guidance and their 2026 guidance. Looks like a really strong report here from Celestica, and the stock is reacting as such, rebounding off of that 330 level. We're trading around 335 here in pre-market action.
Yeah, when stocks are making new all-time highs, it's very difficultness to give you resistance because there isn't any. What we can do is at 345.27, that is the after hours high. So that's one level that we will get to that you just showed on the chart. Best we could do for you. Obviously, as a break it out through 300, it had the big move here. I mean, you always want to see these things hold. Sometimes you do see things pop on earnings and then slowly leak or give it back. So we'll keep an eye on that, but it held up very well last night. So far, so good for Celestica holders. Then let's get to this morning here because there was a plethora of earnings here from a lot of different sectors here. We're gonna start PayPal because PayPal not only announced earnings, but they also announced a deal with who. The people you want to announce deals with is OpenAI. So PayPal OpenAI deal to become the first payments wallet on ChatGPT. PayPal exploding on this, up over $10 in the pre-market here. Give us the earnings, and if you have any more color from that press release, let us know.
Yeah, and this pop right here that I'm moused over is where that deal with OpenAI started hitting. So I think you want to say this morning that the stock is more so moving on this deal with OpenAI. But of course, earnings, they are important, and they were pretty solid. Q3 earnings, 134, a beat versus 120. Sales, 8.4 billion. Analysts were down around 8.2 billion. They raised their 2025 guidance and also gave some okay Q4 guidance. The Q4 guidance wasn't that hot, but I think investors probably focusing on that raised guidance. But again, more so focused on this deal with, I like how you said it, Dennis, who you want to be doing a deal with, and that is only OpenAI right now.
OpenAI, when they make a deal or a deal announcement, the stocks just go and get all antsy in their pantsy. It's exactly what is occurring here. Again, big moves here for PayPal in the pre-market. We can do technical resistance. We'll try to do Joel's job, and I don't do it ever as well as him. We're just going out to the charts and taking a look. I mean, you had the high of 79.50, which was back on August the 1st we're going back to. Other than that, we haven't been up over 80 in a long time. I mean, it's a big pop on, a very quick, obviously, a big pop here. So sometimes these things, can tend to fade too. It's kind of just open territory above 80, though. Like, there isn't much in there. Because you go back to early 2025, we cascade down quickly from 90 to 80. So I just say there's not much in here. So technical resistance, not really much to be found. Next stock, SoFi. We'll stick in the payment sector. SoFi popping. Was up on earnings last night. Pardon me?
I said we're flying through them.
Oh yeah, we have to. It's earnings season.
We have to.
We can't mess around. We just got to go. There's nothing you can do. You just got to do it. SoFi breaking out over the 30. Obviously this morning on their earnings, 2.57% is trading higher here. Was up as high as 31.48 earlier, so it is off those highs. The Brentster, how did they do?
They did well. Q3 earnings, 11 cents, beats by 3 cents. Sales, really nice beat here, about 950 million. Analysts were under 900 million. And folks, are we seeing a little bit of a trend here? SoFi raising its guidance. That's the third company that we've looked at this morning that's also raised guidance. Is this an indication for the environment? Do you make anything of all of this raised guidance here this morning and overnight, Dennis?
No, I think, typically companies want to raise guidance. I mean, this is what they want to do. They want their stock price to go higher, and they do everything they can in their power to go higher. But I mean, the outlook looks good here. I mean, we're not seeing any signs of a looming recession. We're not seeing any signs that they imminently need to lower rates right now, that the whole economy is in trouble. Stocks are all-time highs. I mean, this is just, into Fed speak here just for a second because it matters. Sure. Obviously, we're going to get interest rates lowered tomorrow, correct? Tomorrow is when the official
tomorrow
day is.
At 2 p.m. Tomorrow at 2 p.m.
They are going to lower interest rates. Spoiler alert, they're going down a quarter of a point tomorrow. And I mean, how often do you see, a whole rate cut cycle starting with, stocks at all-time highs? Not that often. So this is why it's hard to be bearish. This is what we've been talking about, on this show for a long time. I mean, interest rates going down are good for stocks. And, you set everything up. And yeah, we've had a couple tariff hiccups along the way, but I mean, just the party continues here. And when you got interest rates going down, the AI trade still hot as hell. It's hard to, and then you got seasonality coming in. Ryan Dietrich talking about saying after October 27th typically shows, the strongest part of the year. Well, we're October 28th now. So you got seasonality working in your favor. You have interest rates, going down, and you have companies that are raising guidance. Hard to come in here and say, oh my gosh, sell everything. The end of the world is near. So I think we just continue to be long, trading bullish strategies. My market neutral, I only lightly hedge it now. So I've been playing from the long side as well, which, you're in a bull market when I'm fully market neutral trading. And I'm like just laying off a little bit of the spies and the Qs hedges to make more money. So blindly buying dips right now is winning money, and blindly being long has been the way to go. There'll be another rug pull. There always is, but those rug pulls just seem to be buying opportunities.
And we're gonna talk a little bit more about the interest rate cycle and the Fed and how they influence growth in the economy a little bit later with Danny Kirsch, who sent me over a couple ideas for topics, and he's got a good angle on this. Triple D, I think you're gonna like it when we talk to Danny in a little while.
Okay, awesome. That'll be exciting too. Remember, we have Eric Jackson coming on at 9 a.m. too, so we're double guested here today.
Yeah.
Nice. Okay, and just to tell you how diversified this rally is, the stock that never rallies, the stock that never participates in anything, the stock that is hated and had a 7.5% dividend yield yesterday when it went and reported earnings this morning. UPS, you know where I'm going here, Brentster. The earnings were good. Give them to us.
Earnings were great, I would say. Earnings 174 versus a 130 estimate. Sales 21.4 billion. Analysts were down around 20.8 billion. Guidance was better than expected. They're expecting Q4 sales 24 billion versus about 23.8 billion estimate. And importantly, let me put up the chart here. Oh, there we go. And I think importantly, UPS also disclosed that it has already cut 34,000 jobs over the course of this year. You had this theory, Dennis, I think last week, talking about stocks at lows doing job cuts, stocks at highs doing job cuts. I think the case here for UPS is investors saying, oh, they're trying to do anything to cut costs, and maybe liking this information here. We also heard Amazon doing job cuts yesterday, about 14,000 job cuts. We heard about Applied Materials. We heard about Target last week. This is kind of becoming a thing here, folks, with this job cut theme, I think.
Yeah, and there were rumors that the dividend could get cut. They might announce it tomorrow or today, which is today. That was rumored yesterday. We haven't seen any of that here either. So, no, I mean, this is like, okay, through the quarter was decent. I think now, when it pops 12% and it is the dog of all dogs, is this the made turnaround story and I want to be long this thing? I mean, did that thing really hit 107? Is that correct? Is that actually a real print? Because if it is,
I see
109.
Look at Thinkorswim says 109 even.
Okay. Stop and talk to all these news algos, or don't talk to anybody who's chasing on earnings. This is UPS. This isn't an AI stock. This isn't like, oh my gosh, I missed it. I got to get in. You don't need to chase a stock like UPS. Never, never, never. Stocks are in these downtrends. When stocks are trending down like this and then have ridiculous spikes up to the tune of getting back, the majority of its year's losses, those are things you don't want to chase. Those are things you don't want to be jumping in and saying, oh yeah, I need to be invested in UPS. If you didn't need to be invested in UPS yesterday, you don't need to be invested in it today at all. This is, bouncing, nice. Earnings report, we're fine. Is this industry still getting disrupted? Is UPS still going to be disrupted? Yes.
Absolutely.
I think it's going to be massively disrupted by AI coming. I think physical AI is going to do a number on UPS. So I think, when you get 20% pops on a stock like this, I think there are more selling opportunities than buying opportunities. Now, in the middle, $100, because it was 109, closed at 80, you're kind of stuck in the middle with me. I don't think there's much of a trade here, but 109 sold to you.
Certainly. Watch that $100 level. Nice, big, psychological, round number. We got to keep our eyes on here.
But the market likes a good comeback story, and UPS, has the potential to be a comeback story. And we know what the comeback story of the year, at least the second half of the year, is. It's UNH. And we could thank Warren Buffett for that, because he came in, the Oracle of Omaha, before his retirement, took a huge position in it, Stock popped from 270 to mosquito in here. How the heck is that alive? 270 to 305, on his, and it's just continued to move higher. Now we get the earnings from UNH here this morning as well, and the party continues.
Party does indeed continue. Earnings 292 beats a 279 estimate. Sales, I'd call them right in line at 113 billion. So that's like a fine report, nothing to write home about. But
Yes.
again, they did raise the guidance. Fiscal year 25 earnings now expected to be at least 16.25. The prior guidance was $16. Whether maybe that guidance was a little conservative before. I mean, it's only a quarter of a guidance of a earnings guidance raise for $16 in earnings. Not the hugest raise there. And also the analyst estimate is right around 16.20. So although they did raise the guidance and you're seeing the stock moving higher here today, I'm not like super convinced that this is like the strongest report here this morning.
No. I mean, it's a pop. Stock is in consolidation ahead of it. The earnings are fine. I mean, and now the comeback story has kind of already occurred here too. I mean, when you look at UNH, we've come so far from those lows. I mean, now if you're thinking, oh yeah, it's going back to 600 imminently, I don't think it is. I think it's got some work to do. I think 400 is major resistance. I think, Warren Buffett's in there and that's all exciting and everything. But at this point in time, I think the easy money has been made in UNH. So I would say more that I'm sitting on the sidelines on this one. A lot of sidelines sitting here today. And I mean, earnings are hard to trade. This is some of the hardest trades, like figuring out, where this is going to go, where earnings is next, where are we moving, like what's the earnings report? Are they going to be reversals? There's a reason that people, use options to trade these things, because the predictability of the moves, even after the reports, are often very unpredictable. So it's tough calls to say, because you do see reversals and you do see stocks that, gap and go. You see both happen here. So is UPS going to be a gap and go? Is UNH going to be a gap and go? That's to be determined. But at this point in time, sometimes it's just the best trade is just to sit on your hands or sit back and eat some popcorn and watch the price action here until it starts to settle into an area and it gives you another setup. I don't see setups in UNH. I don't see setups in UPS. I don't see like earnings reports that are like, oh my gosh, I have to be in here. And I see stories that, are definitely, not broken, but beaten down stories here. Like these are stocks that are well off its 52-week highs. There's no AI to be found really in either of these names. So I think, just don't get too excited. Just sit back, relax, have a Coke and a smile, and we won't say the rest of it.
And why not get a lot of information? This is a really good time where the market is getting so much information. You can participate in some of that information gathering if you kind of sit back and like, wow, we're getting this trend where a lot of companies are raising guidance. What does this mean for my strategy? What does this mean for the market? Don't feel like you have to be participating in earnings. Just sitting back, looking at the information, digesting the information, I think is extremely valuable.
Let's continue to go through the earnings parade here. Again, if you have a specific stock that you want to talk about, let us know. We will jump into those because we're just going through, the highlights here. I am getting to RCL. I know in the chats people are talking about it. Adrenaline Online is talking RCL getting hit hard. It absolutely is. Bar a little bit higher here. Stock not far from all-time highs, and they come out with earnings. Brentster, how did they do?
Earnings were fine. 575 versus 567. The sales actually missed slightly, 5.14 billion versus 5.16 billion. Guidance was pretty weak for the quarter, expecting Q4 earnings 274 to 279. Analysts up at 289. They did raise their fiscal year 25 earnings guidance really slightly. They raised it by just about 8 cents for like $15 in earnings. So I think you hit the head on the nail there, Dennis, with, this was just kind of like tough tape to be reporting in for a company like this.
Yes.
When I think the bar was pretty high already.
Yeah, exactly. Bar high, we've heard from a couple of cruise lines here. We got a nasty hurricane. I don't think that's going to affect them longer term, but short term, maybe they got to divert around, which we can talk that hurricane trade here in a few minutes here. But RCL down 27 points. I mean, this stock's one of the best cruise lines. It's been one of the best of breeds for a very long time. Dips probably get bought, but again, I like buying. I follow Brian Shannon. We've had him on the show. We should have Brian back, but he always talks about buying strength after the dip. So not buying the dip, but buying the strength after the dip. And that's what I think, people, even myself included, do too much, is that we're so excited to catch the falling knife. We're so excited to be the hero. We're so excited to say, yeah, this is down 27 points and it's going to bounce right back. Some of them do, but most of them don't. So, catching the falling knife is one of the most dangerous trading strategies out there. So I like to wait till, she's stabilized a little bit and then starts to show a little bit of strength. And then if you need to be in, that's the time to strike, as opposed to just catching the knife and saying, yeah, this is the bottom right here because I say it is.
And especially look at this level in 300 here. We had a nice little support level right here back in the end of July, early August. Kind of tested that again here more recently, going back to the middle of this month. I mean, if this thing can get back over 300, might be a little bit more excited about this if you are a long-term holder.
Wayfair, W. We're all over the place here today. Why are we all over the place? Because the earnings are all over the place here today. You have companies reporting from all different sectors here today. So Wayfair, going back to retail, W, which is, a retail darling. Reported earnings here, Brent Stern. Give us those earnings for W.
W earnings 70 cents, beats by almost 30 cents here. 43-cent estimate. Sales also pretty strong, about 3.12 billion versus about a 3 billion estimate. This has got to be one of the sexier charts we've looked at recently.
I think so. And again, turnaround story here to a certain extent as well, because Wayfair back during the financial crisis was $350 a share. We've been stabilizing for a long time here now. And obviously, in April 20 or during the tariff stuff, this got down to $20. So I mean, at a certain point in time, it just maybe was just ridiculously overdone. So now we get to a point where, it's rallied a long ways from that $20. So we've come a long ways. You start thinking like $100, we're up another $8. You're coming into resistance here. So I would say in this case, it's a little bit like, I'm more opinionated on this, where I'd be more selling the rip because we've just come back so far. Above 100, it gets interesting, but it's usually the first time up there in 4 years, there's going to be some technical resistance up there at 100.
Sure.
So I'm going to stick with major resistance up at 100. I know we got to 98 here this morning. So I'm not chasing this one.
And I would also say look for some of the downside reaction, how the price is reacting if we are going to go back and test this $90 level that had been resistance, 1, 2, 3, 4, at least 5 times in just the last month or two. Let's see what happens here this morning with Wayfair.
One thing to consider, getting filled in some stocks here. Must be some stuff moving. Just hang on.
Cool.
Sorry. Trying to trade and just some oil stocks moving around.
The many talents of Dennis Dick.
Multitasking on an exponential level, trying to. I can't wait for AI to do all this for me, but it's going to do a crappy job of trading. I know that. We were just talking about, and I lost my train of thought. We were talking about earnings.
We were doing Wayfair.
Yeah, and just all over the place. Like this earnings report, there's so many different companies reporting from different sectors here. And, some of these stocks have just been really beaten up. And we know what we've seen happen here over the course of the last month and a half, and we've been talking about it relentlessly, is the value trade. The value trade has come back into vogue. And, that's probably because interest rates going lower and value stocks really care about that. So, I mean, some of these stocks that we're talking this morning, like the UPSs and the UNH, and even the Wayfair to a certain extent, some of these are value names more than growth names, PayPal as well. So, I mean, we're at a point here now where it's obvious that this value rally that we've seen happen here over the course of the last 6 weeks or so is something more than just a blip. So I think you can start looking, General Motors and Ford too. Like you can just see it start happening. Like value stocks are cool again. How long do they stay cool? I don't know. But when they stay cool for more than 4 or 5 weeks, it's not just a blip, it's a trend. So I think we start looking at other beaten down names maybe for this earnings season and say, hey, this stock's been pretty beaten down here. It's a value name. If they say anything okay, stock's probably going to rally just like UPS just did. So sometimes you can just take the information from the earnings reports and not maybe necessarily trade those ones, but use it to trade other ones.
That's smart. So how would you go about, you probably have a couple ideas off the top of your head, but if you wanted to do more in-depth research, how would you go about doing that?
Well, you're just looking at what reports, tomorrow, what reports the next day, and what do the charts look like? Are they beaten down? Are they low bars? Are these stocks that people have had left for dead? Because the left for dead ones are actually the ones that are doing well right now. We saw this momentum, come out of the names like Oklo and the names like the rare earth stocks. We saw this over the course of the last 2 weeks here. Some of that money has definitely moved into value names. It doesn't go to cash. Everybody is scared to death of cash for good reasons. Inflation's still beating it up here. Interest rates are going lower. I mean, there's a lot of reasons to not want to be in cash. So the only reason to be in cash, you think the imminent crashes are happening. Doesn't look like that, and that might happen, and maybe just one day a new catalyst happens and all of a sudden the rug pull happens and we'll want to move to cash. But right now, this market does not want to be in cash. And if the market does not want to be in cash, you have to look at what are the cash alternatives here that seem to be a little bit safer right now. And some money is moving into value names. So I think we stick with those value names, at least for now. So I think value is cool again. So give me your value names. If you got stocks that are beat up, especially ones that are due to report, some of these stocks can turn around and have, decent stories here. I mean, even looking like, some of these healthcare names, because they've just been murdered. They've been left for dead. And all of a sudden, some of these stocks are starting to show some life. Here's Merck at $88. It was $78 a month ago. Here's the XLV at 146. It was 135. We know the XBI has been moving higher, but those aren't value names, but that's off interest rates. But, drug stocks have been really beaten up, and, there is value here. Some of these stocks are really dirt cheap. General Motors and Ford were trading 9 times, 7 times earnings. Those things rip roaring and higher off the earnings because you know what? It's just seller exhaustion. People are like, actually there is some value in these names, and they're looking to diversify out of some of these Momo names that they really got beat up on in the last couple of weeks. I mean, there was a lot of people sitting in some of these Momo names. The rare earth stocks, I mean, MP Materials just went from $100 down to $65 in literally 10 days. A lot of money, crowded trade. There was a lot going on there. So keep all that in mind when you're trading here. Is what you want to see, and what we have been seeing for basically years now is value versus growth. Not value and growth, but value versus growth. The last few days, we kind of have been rallying a little bit together because the overall market's been moving up. But there's always a balancing act here. Right now, at this moment in time, value is picking up some momentum.
Right when you said, the value trade, I mean, the ticker that I typed in right away was GM and Ford. And you've kind of been pounding the table on these names, Dennis, saying like, yes, these things traded at 5 times earnings for so long. With this huge move in GM, let me pull the chart back up. With this huge move in GM recently following the earnings, it still trades at 7 or 8 times PE. So it's not like these valuations are, anywhere near out of the realm of value, even with this large move
even
higher.
with the big move, some of these stocks are still pretty darn cheap. We are getting a breaking headline. Bloomberg is reporting that DJT is planning to enter the booming prediction markets business. So DJT
like
popping 8%.
DJT?
Yeah, prediction markets here. DKNG going
Dude.
down again. Not only is Robinhood, and I would think this actually would be bad for Robinhood if we see DJT. Not that DJT is going to eat Robinhood's lunch, but I wouldn't be surprised to see a little bit of weakness off this because of predictions markets. But DKNG is going down on this as well. So DJT just got an 8% pop. DKNG moving a little bit down on this headline. DKNG has been an absolute mess. It reports Friday, but I mean, we know Robinhood coming in, pissing in their pool to a certain extent, and that continues, and the chart just looks like hell as well. So DJT getting a little bit of a pop. I don't think anybody's scared of DJT, but initial reaction was, I think Robinhood gets hit a little bit on it, and DKNG goes down while DJT goes up. Again, just rumors here, no confirmation, no press release, just Bloomberg citing a statement that they're planning to enter the booming prediction markets business. I mean, DJT is trying to find its way. This is a stock that's really been beat up as much as Trump. Think about the power that Trump has to move stocks. He hasn't had any power to move his own stock, which is really interesting in itself. Like he comes in, he takes an investment in something, and bang, the stock goes up 25, 30%. DJT is not that case. It's sitting near 52-week lows, just kind of left for dead. Is there a play here? Maybe that could be the case. Is there something here eventually where DJT, with the power of Trump and the name of Trump behind it, eventually starts to show more life? I don't think it's a bad play down here in the 16s.
From my position here, producer, helping a little bit on air, listening to you, Triple D, for the last few months, and of course the last month, I think probably your most hated stock is like DraftKings. You've been like very much hands off DraftKings.
Yeah, I don't like it at all.
Not investable. Maybe can't even trade it really right here.
Well, I'm scared to trade it from the long side. I've been scared to trade it from the long side. And I mean, valuation on this thing is not crazy. We can just go do that exercise for you right now. It's trading only 15 times forward earnings. So you think, oh, it's cheap. This is the way to go. But the problem is that everybody's coming for them. Disruption. You know, we talk about stocks and industries getting disrupted. This is getting massively disrupted. And when Robinhood comes and starts to come into your lane, Robinhood is the best player. It's like Amazon. It's equivalent to Amazon coming and disrupting UPS is the same as Robinhood coming and disrupting DKNG. And that's why I'm scared. You know, you can see, but I think DKNG is more of a value trap. So that is why I continue to remain out on DKNG. I was long DKNG for a while until Robinhood starts getting into their businesses there, and then you can't mess with Robinhood. There's just so many users, so much power on that platform. It wants to be the one-stop shop for everything. For all betting and gambling and everything, you can see where Robinhood is going. So keep that in mind. I mean, yes, you know, DKNG, you know, there's room for more than one player in this industry. And yes, they have a great name in the industry, but you can definitely tell that there's disruption coming here. Like, think about when DKNG was growing and they were showing all those DraftKings commercials and we were just relentlessly, you know, bombarded with them, you know, because they were trying to win over customers and get people on the platform. I mean, you don't see as many of those commercials anymore. There's definitely competition here now for DKNG.
Just want to confirm we are getting a press release from DJT. The title is Truth Social to become the world's first social media platform offering prediction markets via an exclusive partnership with Crypto.com. Stock has sold off since that rumor, and now we're getting confirmation. But Dennis, we've been talking about the importance of media relations, companies getting these buzzwords into their press releases. This one from True Social and DJT here kind of hit all the boxes. They're talking about the first social media platform, prediction markets, an exclusive partnership with Crypto.com, but still investors kind of selling. This is definitely a little bit of a buy the rumor, sell the news moment here.
Yeah, it checks all the boxes.
Right.
And again, you have to consider one thing is, as much as, you know, Trump is loved by a lot of people, the DJT stock has been hated. The stock is obviously, you know, topped out. We know back, you know, when it first came out over $70 back in March of 2024. It's been on a downtrend. And really, the biggest problem with DJT in the last few months is just no interest. The stock just sits here and like just slowly leaks. Like, that is the worst for your company and your stock. When your stock just loses interest, like, it's not, you know, it's one thing, you know, to be loved or hated, but it's worse to be irrelevant. And what DJT at this point in time, and it's amazing because Trump is so relevant, but the stock of DJT itself has kind of become irrelevant. It needs to be, you know, like, needs stuff like this. And maybe this gets it back to relevancy here, but the stock has been just left for dead here. So they need to do something. So I like that they're doing stuff like this, trying to get involved, because you have that Trump name, which is the most powerful name in the world here right now. Yet this just keeps, you know, leaking. It's amazing that they can't figure out, you know, how to move their own stock price higher when they're moving every other stock price higher. So they're trying some things here. So that credit to them. But I mean, the stock itself has just been a place where money has gone to die over the course of the last year and a half.
Dennis, we do have Danny Kirsch in the background. Want to check in to see if you wanted to do a real quick little earnings preview, or you want to go to Danny?
Danny's ready. I'll bring Danny in here for sure. We don't like to keep our guests waiting. So Danny's been making some fabulous calls as of late.
Danny Kirsch, head of options at Piper Sandler. How is your morning going?
Good. How are you guys doing?
Doing good. We're just going through so much news this morning. Earnings off the wall. A couple deals here we were looking at. What are you looking at here this morning, Danny?
Trump's feeling he'll probably make pretty good predictions. Is that a safe bet?
Say that again.
You just broke up a bit.
I said it sounds like Trump getting into the prediction market. Sounds like he'll probably make pretty good predictions. I think it'll be very lucrative.
I think it's not a bad idea. Trump in the predictions markets here.
No, there's headlines this morning. There's headlines this morning. They're getting into it.
We just saw that.
Yeah. So
Danny, Do you want to talk on the DJT for a second here? I don't know if you want to comment on that stock, but I mean, I just commented briefly here, and it's been a place where money has not been happy here for a while. As much as Trump's power has been here to rally stocks 20, 30, 50% when the U.S. government takes a position, DJT has just been leaking, really doing nothing. Now, this morning it popped up initially here, and it's already leaked away on this headline as well. Is this something you're looking at, like the way to play Trump? Because a lot of people believe this company is the way to play Trump. But really, this company's just been a place where money has been lost.
I would just avoid it. I mean, I'm sure there'll be some squeezes here or there. It's also how do you think about a company that if the administration changes in 3 years, like what is the value in this company? So it's like you have to kind of like your model has to be a 3-year plan, and I don't think I guess the bull argument would be Musk takes it private or loops it into Twitter. I don't really know, like it doesn't really make money and it's not like a real business. So I wouldn't get long unless you thought that Tesla or someone was just going to take it private.
And the platform is a mess too. So I downloaded Truth Social about 6 months ago because Trump was moving everything. And I was like, I need to get to the source of these tweets, these truths here, because when he truths something, it pops up. And I downloaded it, went through the whole process on my phone, put notifications on just Donald Trump. And whatever reason is when the notifications come through, they're late. I'm not getting like the thing tweets and I don't get the notifications sometimes for 10 minutes after it. I'm like, they can't even figure out how to notify me timely on the thing. So I mean, it's just definitely, was a disappointment for me that. And then the only reason I wanted to do, I followed one person, Donald Trump. And I'm like, it couldn't do its job to give me the notification. People are talking about a tweet. And I'm like, well, why is it not notifying me? And then 20 minutes later, I get a notification. They can't even give out timely notifications on it. So the platform, I agree, is just a mess.
There's thousands of other stocks. There's just other stocks to like.
Let's stop talking about this one, Dan.
Yeah, if you want to get long Trump, I'd get along Robinhood. That would be the one I would get long if you want to play Trump. That's like the deregulation trade. That'll be the everything app, I would guess, and that'll be they clearly like while the assets aren't quite there yet, they certainly have a foothold into younger people, and as their assets grow, they'll be on Robinhood, and that's the place where it'll be. I want to trade crypto. I want to trade sports. I want to trade stocks. It'll all be there. So I mean, and then the stock I know is extremely. I'd say I don't want to say overvalued, but it's it's not cheap. But I would that's the stock if you want to play like the Trump administration. I'd just stay long that.
Has it gone too far though? Like, I mean, I look and I think the same thing. I love the company. I love what Vlad has done here. But then I look at the run this thing has had, and we were, back in April, we were $29. It's 146, and I think I just missed it at this point in time. Like, has it gone too far, or is it just the case where just the strong get stronger and don't even worry that it's gone too far?
Yeah, I mean, I don't like. Who knows? I don't. You could have said that 50% ago.
I know.
Oh, this looks really expensive.
I think I did.
Yeah, it's like these stocks. These stocks, like I had a client say to me like a little while ago. It's like, what? You're a valuation guy now? That's not this market. This isn't like we're playing the valuation game. It's like, well, should this trade? It traded an 84 P. Is it cheap at a 60? I mean, who knows? And the thing is, like, each earnings are going to be better than the last, so it's going to keep making more money, and it seems to have figured out the regulatory issues and the fact that they were able to do these prediction markets on top of everything else they're doing is it's incredible. And there's been record volume in prediction markets. It seems like every weekend that there's NFL. And, I think again, over the next several years, the regulatory environment is so positive for companies like this, it's hard to fade. Now, after the midterms or maybe around that, there might be a trade there, but for near term, I wouldn't fade any of these stocks.
Danny, so we are getting into the end of October here. We got a couple months left in the year. How are you feeling heading into the end of 2025?
So I'm getting nervous because we've been writing about like this melt up idea into year end, and I know like I don't want to jinx it, but here's the rationale for the melt up. We're in an easing cycle, and they already cut 125 basis points already. Now we're starting to cut again. Oil prices. Do you remember? Oil prices super low? Like no one talks about oil. It's not a function. I'd say, and on a nominal basis too, it's even less of a less of a risk. Full capex expending, huge deregulation. S&P earnings are going to hit a record high this quarter. progress on U.S. and China trade. Just I think any sort of agreement or holding off on further tariffs will be viewed as a positive. It sounds like that's what's going to happen. We're going to get huge tax refunds. That'll be in the beginning of next year. And then lastly, we're getting into the super positive seasonal time of the year. So
Sure.
November, the S&P has averaged a 4% return the last 10 years. With one down month, we were down 80 bips in 2021. For what it's worth, XHB, that's like the housing ETF, and ITB, the
Mhm.
other housing ETF. XHB is more furniture and like paint companies, whereas ITB is mostly the builders. Each of them have been up the past 15 Novembers. Qs have been up 9 of the last 10. Russell's been up 9 of the last 10. We do tend to rally in November. Uh, and then you start to get into, okay, well, my fund might be somewhat underperforming. I need to chase. Again, you just sort of like play for this sort of rush, and the exit volatility I don't think is super high. And so we like December 31st calls and SPY, Qs, IWM just to play for this sort of chase into year end, behind all this positive, I guess, momentum and positive catalyst. Not to mention, we're in the middle of earnings, and so far so good.
Mhm. So what about earnings? How have you been interpreting? How have you been viewing earnings so far this season? Are you feeling favorable? We've seen a lot of companies, especially today, raising guidance, maybe giving, fine quarters, but raising guidance. How are you feeling kind of digesting some of the earnings info so far?
The bank's earnings were great. I know there were some concerns around credit risk with regional banks, but since then, they've almost recovered all of those losses from middle of last week, and are not quite at the highs yet, but they've been acting very well amongst names that have reported. Wayfair this morning, we've been bullish on that at Piper Sandler and crushed earnings. Stocks up, I think, 10% pre-market. So you're having these diverse beats. I think one of the cruise lines reported looks good. I get this like idea of a K-shaped recovery where the high end is doing well and maybe everyone else isn't. But that being said, is like that should mean that earnings are going to continue to be strong. And you saw Amazon yesterday saying they're cutting 30,000 employees on the corporate side. You could kind of put that right into margin, would be my guess.
Sure.
And Amazon's a name that we like for earnings. We think the options are cheap. We've been pitching Oct 31st calls. Our analyst likes the name. We think the partnership with Anthropic should hopefully create more positively around AWS. There's an AWS December event as well where they're going to announce enhancements and new clients and the growth of the business. But near term, we're pitching Amazon Oct 31st calls for an earnings beat. The stock is up 3.5% this year. The Mag 7's up 25% this year. Qs are up a little over 20%. It's just kind of been a laggard this year, and I get it. People are worried about OpenAI. Um, and it certainly could be a threat, but I think that maybe is a down the road potential threat. And Amazon is so far ahead in logistics and AWS growth and everywhere else, and think that that'll be an area where people start piling money into to play catch up.
We've been talking about the Magnificent Seven, and recently we're starting to see some strength in the last few days. But it's funny because the strength in the last couple months has really been all these smaller Momo names like the Oklos and the rest of the nuclear stocks. Obviously the rare earth stocks were really rallying here. But you look at stocks like Microsoft, and they've really gone nowhere for 3 months. They've actually been down. Amazon's another one that would fall into that category where it's really gone nowhere for 3 months. Meta, has been down for 3 months here as well. All these companies are due to report here. Google, Microsoft, Meta on Wednesday, Amazon, Apple on Thursday. So 5 of the Magnificent Seven reporting within 24 hours. Is the bar actually low here?
I think so. I mean, one other way to play this, if you wanted to do it, if you didn't want to pay for the options, again, we think Meta's cheap for earnings. Like the options are actually cheap, so we like call options. We like call options in Amazon. But one other way to play it is XLC. It's the Com Services ETF.
Yeah.
XLC is roughly 50% Meta and Google, so those are each roughly 25% of the ETF. So we've been pitching just buy November calls, and that'd be like a bullish play on both Meta and Google for earnings, but the volatility is significantly lower. So that'd be like I don't want to say wimpy, but that's certainly the cheaper way to play for further upside in tech. You don't get Amazon's an XLY, but you get a few of the others. And again, volatility we think is very cheap there. And that's kind of like the alternative play to get long.
So Danny, you mentioned oil a little bit earlier, around $60. give us some thoughts here on where you're thinking oil, why it's so important here, down around $60.
The only thing I would say is like we're neutral on oil, but the positioning is so short and nobody thinks it can go up. And usually when that happens, there could be a potential surprise. So we've started to nibble a little bit and see oil's down $2 today, a little bit on calls just to play for some sort of surprise squeeze. It's almost like a macro hedge as well, because that could potentially derail this rally if you get some sort of oil shock. And you still need the catalyst, but at least the positioning is already in. And that's one of the things we talk about a lot, especially when we get nervous about the market is, are people super long? Are people, super positioned one way? Because then a catalyst can spark some sort of unwind. And I think oil is sort of the opposite, where people are very short and you get any sort of positive catalyst, you get a rally.
We had a question from the chat on Bitcoin into year end. Any thoughts on Bitcoin heading into the end of 2025?
I think probably stay long. One thing that we've been seeing clients do, and this is the higher beta part of the market, and this is another way to kind of get long. The Trump administration seems to be crypto and Bitcoin specifically. I like it as a catch-up trade to gold, and
Sure.
I think what goes on in Bitcoin, there's a lot of people who overwrite, so they long the underlying, they write calls. So the volatility, I think, is extremely cheap. And as far as like a right tail for year end, IBIT is what we trade mostly because it's super liquid. I think that
Okay.
sets up fairly well.
Danny, what would derail the bull thesis? Well, what would take, and say, okay, seasonality has failed? Like, is it just some geopolitical risk? Is it a Trump tariff? Like, what would change your mind that's saying, hey, I think, like all of a sudden maybe we need to raise some cash? Because right now, I feel like we're all in the same boat where everybody just thinks we're going up towards the year end. And I'm with that too. I mean, I trade market neutral most of the time. And I've been like laying off the shorts and just trading flat out long because, it's just what's working here. What would change the market sentiment towards like, all these stocks?
Two things. Well, let it come to mind. One, there's the Fed, tomorrow? If it's surprisingly hawkish and they push back on some of these cuts, I think that would really derail a lot of this excitement. Two, we have these trade talks later this week between China and the U.S. If those go poorly, where it leaves that actually we don't agree on anything and U.S. is ramping up tariffs, we already saw like a taste of that a couple weeks ago in that most recent solve. I think that would derail this rally. But other than that, I find myself pretty positive. The geopolitical events, for whatever reason, don't seem to affect the market at all. To me, it's really China, U.S., the trade talks, and the Fed. If the Fed pushes back and they're saying, well, actually, we're concerned about inflation, that I think derails this rally. But otherwise, it feels like this just kind of keeps going outside of like a deep sea type moment that shocks people and derails some of the AI excitement. But again, I think the AI bubble burst or whatever everyone's worried about, I think that's a next year sort of concern at this point.
One more question here for you. A couple people in the chat asking about extended hours options trading. Do you have any like tips or general thoughts? I know it's kind of a general question, but anything you could respond to a couple users here in the chat?
Sure. So I mean, right now, I don't know if, at least for as far as I'm aware, you can only trade SPX and VIX overnight. I don't know if that something has changed where you can trade more options on like Robinhood. I don't.
Okay.
Our clients, I know that like our institutional clients can trade S&P and VIX overnight, index options. And so what we find is that as long as the size isn't too big, liquidity in S&P is very good. I would not recommend trading VIX overnight unless it's like before like an NFP and you just set a limit. That's where we find a little bit more interest because liquidity is so poor that it's just you pay so much bid off. But S&P has been totally fine, and we actually do see clients trading Sunday night, Sunday night, and then prior to macro events that occur pre-market. So, an example would be like a payroll. We'll have people buying puts, buying calls prior to the event, and then liquidity is there in
Sure.
SPX. So I think that's totally fine. As far as the rest of if they do have like 24-hour options, I'd imagine I'd be very careful because I think liquidity wouldn't be great outside of a few names.
Danny Kirsch, head of options over at Piper Sandler. That was like a high impact 15 minutes there. Thanks for all the good info, Danny. The chat loves you every time you're on, and we're looking forward to getting you back soon before year end.
Thank you. I really appreciate it, guys.
Thanks,
All right,
Danny.
later, Danny. Triple D, we are like off to the races today. We are like, how many topics have we covered so far?
We're all over the place, and I tell you, it's not AI. Look about how many shows we just talk AI relentlessly, Ocklos and all the other nuclear names. We just talk
Interesting.
AI stocks, AI stocks, AI stocks. It's kind of been like a value, a little bit all over oil. We talk a little bit about everything today, and maybe that's where the
Yeah.
market's moving to an everything rally. Because we have not had the
Wow.
everything rally all year. It's been the selective rally. It's been the AI rally. It's been, momentum names. It's been a little short squeezy here and there. It's kind of feels more like the everything rally lately. So that's, where I'm sitting here too, is like, let's look for stocks that actually have been beaten up and are starting to show a little bit of life. Even the XLC, I mean, bring up that chart, Brenster. We just had Danny mention it here. We'll bring it up here in the background or in the background here and just look. I mean, here is, an ETF that's obviously full of Google and Meta. But I mean, we topped at 120 way back early September, and we just kind of leaked, and now we're just starting to show strength after the dip. So, I mean, if you're looking at that and you have catalysts, obviously, and it's going to matter, Google's going to report Wednesday night and Meta's going to report Wednesday night as well. So this ETF is absolutely going to fly one direction or another here on those earnings reports. But I mean, when you lift up the hood and you look at Meta itself, it's not like we're chasing here really on Meta. The stock's been a consolidation station. Look at that chart. And just kind of been doing nothing here. So, I mean, if you think this is going to be turning into an everything rally, maybe it's time for the Mag 7 to actually start participating here, because the majority of the Mag 7, with maybe probably Apple's been the strongest of them, which is surprising, have kind of been sitting around doing nothing.
Sure.
So maybe it's the time. Maybe it's the time to start thinking about getting into Magnificent 7. And ahead of the earnings is always scary, but if they report, this is like, it could be the gap and go situation again. I mean, last quarter Meta had the gap up and held up for 7 or 8 days before we started to leak away. Microsoft did not. Microsoft gapped up and gave it back right away. But the setup's different here now. We're not sitting at highs. If they come out and say, pretty decent numbers here, raise guidance again, I don't see any reason these stocks can't go higher. I kind of like them in their earnings.
And then just to mention, we also do get Alphabet, Google earnings tomorrow. Must be after the close.
Yeah, so we get Google, Microsoft, Meta, and then we have a lot of other stocks reporting too: Boeing, Carvana, Caterpillar, Etsy, ServiceNow. There's so many, and then Thursdays, Amazon and Apple, the highlights. But then there's Lilly and First Solar, which has been a monster lately. MasterCard, Twilio, Roku, Cloudflare, Roblox. Reddit's reporting, Coinbase. I mean, you're in the heart of earnings season. Within
We're in the heart of it.
Thursday 24-hour period, that's the beat. That's the heart.
Yep.
That's what's going to dictate the next move. Because if these companies come out, and so far so good, we're seeing a lot of beat and raise quarters here. If the big Mag 7 does that, there's no reason to think that this party can't continue. So, as much as I'd like to find the bear thesis, and I wanted to ask Danny his thoughts as well, I don't see anything imminently derailing us here right now. And seasonality plays in the favor here too. So is it the fact that maybe just a lot of trades are crowded and we've been up too much? The bottom line is we haven't been up too much in a lot of these stocks. Like we just said, like the Microsofts and the Metas have lagged here. So there is a setup where these bars actually aren't as high as we think they are.
And I want to shift attention here to non-earnings for the first time almost of the day. Big deal out of Skyworks and Qorvo, SWKS, QRVO. Pull up the chart on Skyworks here real quick. Deal was $22 billion in value. Can get you the exact numbers here if you give me just a sec. This was kind of weird because both of these stocks were halted. QRVO, SWKS were both halted to announce this news item. The news came out. They were set to resume. I think it was 8:30. I might be wrong on that, but like these stocks didn't really trade for like the first minute or so. I don't know if NASDAQ just had a little issue getting these open. But that was kind of weird because this Qorvo even moved lower a little bit after this deal. Details here.
I see
Here we go.
What Qorvo do?
Qorvo, thank you.
Yeah, QRVO. A little
yeah,
bit.
So
initially,
let me zoom in a little bit here. Yeah, that was like, yeah, it initially moved a little bit lower. Yeah, actually, I think it was 7:30 that they resumed. The deal is at $32.50 per share in cash, Also, 0.96 Skyworks common share for each Corvo share. Again, this is about a $22 billion valuation. Any thoughts on this deal here this morning, Triple D?
Well, lots of thoughts. The first is this is two of the biggest Apple suppliers merging together here. So that's interesting in itself as well. Is this becoming a one-stop shop for Apple? I mean, obviously they still have Glass and we're at GLW and stuff, but I mean, you have Corvo and you have Skyworks, which are huge, radio and chip giant suppliers here for Apple. It's interesting that, these two companies, which obviously have the big, their biggest customer in both cases is Apple, maybe just consolidating because that's who we're dealing with is Apple all the time. It just makes more sense. Synergies probably make a hell of a lot of sense here. It's probably why both stocks are up. Usually when you see a merger, one goes up, one goes down, they're paying a premium and they're going. But there's so many synergies here with their major customer just being Apple. It makes it really interesting. So, I've always pair traded these two stocks with each other. When Apple goes down, Corvo, Skyworks goes down. Apple goes up, Corvo and Skyworks goes up. It's always been. I've even got slides, on some of my educational stuff, on the major Apple suppliers, which still remains. But merging these two companies probably does make a hell of a lot of sense here. So it's interesting. I don't think anybody really saw this coming either. So nice pops for both stocks here this morning. So QRBO, SWKS, you pair traders there. Brent just gave you the relationship. We'll do some risk arbs, but we're going to eventually lose this as a pair.
And I mean, maybe unfortunately, we kind of have to say this with deals, and especially I think knowing that these are very similar companies. What you just said on Apple. I mean, are there going to be any regulatory antitrust type of concerns here on this?
I don't know. And again, when in an environment where you have iRobot, getting blocked, merging with Amazon, anything can happen. But it's a different administration here now. I tend to think deals are going to be a little bit easier under this administration here. So I think the deal goes through. But there's always that concern.
Yep. Yeah, and we would have to do a little math to see how the number works out for Skyworks to see if there's any arbitrage opportunity here or anything.
Yeah.
Triple D, we are going to be doing. We're going to be standing. We're standing by for an extended show here.
Yeah.
Did you hear anything from Eric?
No, the concern here is that the Blue Jay game went 18 innings last night. So
he was definitely watching it.
Eric would be watching that Blue Jay game. He's from Toronto, he's a big Blue Jay fan there. So he had the Blue Jay hat on here. So I'll message him, but he's coming on here in 3 minutes, so we'll give him a chance to get here. Obviously, I just sent him the link here again. So hopefully Eric's going to be here. But I went to bed. If I was, obviously, hardcore Blue Jay fan, I'd be probably staying up there too. But I'm hardcore Tigers fan, so my team was knocked out a while ago. So I went to bed early. But wow, it was just such an extended. One more deal announcement here. We did officially get the announcement on CEPT. We've been following this one over in the STN room. A lot of our users have been in this from 1040, 1050, 1060. Obviously, it popped up on the rumors about 2 weeks ago that they were going to merge this with Securitize. The official announcement was made this morning, so rumors do come to fruition here, Brentster. CEPT, do you have any other details on this?
Securitize is the deal. Let me see. $1.25 billion valuation. Let me see. Look at the press release here real quick. The ticker is going to be SECZ. That's not the worst ticker ever. I don't know if we have a timeline here, but as we've been learning about specs, we know that the timeline isn't always given initially. I don't think we have a timeline here for when this is going to go public. We're going to need the shareholders to vote on this to approve this first. So that's probably kind of your next step here is we need to get approval there. And then we're going to learn about the timing of when SECZ is going to start trading.
Let's get Eric. He is in the background here. Let's bring him on. It's probably late night for him. Eric Jack, EMJ Capital. It was probably a really late night for you, Eric. What time did you stay up, watch the whole game?
I did not. I fell asleep, and then I woke up. I think it was 2:30, and it was 17th inning. I was like, "What the heck is going on here?" And
crazy.
fell back asleep. And so what time did it end? 3 or something?
3 a.m.
Yeah.
3 a.m.
Wild.
So it's a really late night there. I don't know if you can turn your mic up a little bit. You're a little bit distant there. We can hear you.
I
It's a little bit
can
quiet
turn
here.
them up a little bit. I can
I know
turn you up
Sprint's
in the background just a little
our end
bit.
here too. So yeah. So disappointing, obviously, result, but it's still 2-1. You know, this series is going to be a long. I think it's going to 7, and it would end Saturday night. So I think both of these teams are awesome teams. The Blue Jay hitting is phenomenal, but obviously, you know, the other side is good too here. So it's going to be fun. But we didn't come here to talk Blue Jays here. We came here to talk. Let's start with Open Door. I mean, what's been going on here? It's been a while since we had you on the show. Obviously, the last time we had you on the show was the official, Open Door. The CEO was booted, and when you were live here, and the stock popped from $2 up, to over 3-4. Now it's hit over 10. Leaked a little bit here the last couple of months here because nothing goes straight up, but starting to show life here again. OPEN. What are your thoughts here? Does the story remain the same? Is this something that we should be looking into?
Yeah, for sure. I mean, the next big catalyst are the earnings that are going to come out on November 6th after the market closes. And so I think we've just been in this consolidation period since the burst up to 10 or almost $11. And I think people are just waiting to hear kind of what's next. So I don't know exactly what will be announced. I know, Kaz came on like a freight train in the first couple of weeks in the job. He's been quiet more recently. And last week I was in California at the Stocktoberfest conference in San Diego, and there was an investor relations guy from Open Door there. Chatted with him, and I know that they have some they plan like a big refresh of their whole earnings experience. They plan to make it much more similar to a Palantir type of experience. It'll be video. It will have a lot of Q&A. I believe that they're going to be using the Robinhood system for taking retail Q&A during the call. They're calling it their open house rather than an earnings call. They'd planned to take inspiration from like an employee ask me anything kind of get together, but with an investor focus, obviously. I think that they've been probably holding back some announcements until that earnings call. So, I would guess that we're going to hear about what's the current head count. I would expect it's probably a lot less than it used to be. Hopefully, there'll be some discussion of like potential partnerships, maybe some new employees that have come into the fold, and what the strategy is going forward. So I think that will probably be the next catalyst to hopefully lift the shares up higher as people start to see that this is, beyond just a CAS announcement, a CEO announcement, but there's actually some real tangible actions that are happening here to get people excited about the stock.
So what do you think the impetus for kind of changing that style is? Is it, they want to show off the culture, maybe cultural improvements a little bit? Do you think that there was, a big kind of like managerial reason that they wanted to do that?
Yeah, I think they really want to show that, hey, this is going to be, the Amazon of housing. This is not just an incremental improvement in kind of the way we went about this before, but we're really rethinking how people buy and sell their homes. I have heard from a lot of realtors actually who are Open Door shareholders. I was having dinner on Saturday night with my wife and a couple out in Orange County where the wife's a realtor, and so the husband was joking that that Open Door's their hedge on her career, basically. So they have a lot of Open Door just in case she gets outsourced or whatever by them. But she was saying like there are so many inefficiencies in the whole buying and selling home process. There's so many opportunities for Open Door, especially if they jump into mortgage and title and escrow and kind of simplify that process, streamline that process. So that's what you look for as any company, whether you're Airbnb or Uber, is just like a really inefficient kind of large TAM, national market, international market potentially to come in and grab market share from if you can kind of rethink it. And I really like, Keith Rabois, who's now the chairman. He's often said that when he came into PayPal, there were very few people that were in the employee base who came from financial institutions. Instead, they just sort of came from tech, and they came at totally with kind of a different kind of a novice's impression of how should this industry work, not how has it worked.
Sure.
And I think the same thing's going to happen here.
You got another pick here. A couple weeks ago, you announced that you like this stock, Better Home Financing Holdings, BETR. I didn't know much about this, but I follow you, so I was reading a little bit about it as well. But tell the users, tell our listeners here, about this company a little bit, BETR, and why this is a good pickup for them.
So they're a mortgage originator. So they're competing against the Rockets of the world. I forget the other name.
UMAC.
UW.
Oh, no, UWA. Yeah,
UWMC.
UWMC
right.
is too many.
Yeah, there it is. There it is.
One thing about this industry is apparently if you do really well, you get to buy an NBA team afterwards. So tells me that there's some margin here that people are kind of overlooking, and maybe that's Jeff Bezos used to say, your margin is my opportunity, and so Better is kind of like trying to come in as sort of like a lower cost mortgage provider. They originate, so their job is if you come to them on a direct consumer basis because you see one of their web ads somewhere, they're going to try to match you with the cheapest mortgage for you. And so whether that's some credit union, some bank somewhere, whoever. And so they got to, it's interesting that the CEO, this guy, Vishal Garg, about 10 years ago, when he was sort of thinking of this matching problem, and how he could automate it and how he could make it much more efficient. You know what he did? He went out and he hired the guy who worked at Spotify at the time, who had built their original music matching algorithm. And he said, I've got an even more difficult problem for you than matching somebody's musical interests. I got to, match somebody's credit score and their background, with all these potential mortgage providers. It's going to be a more difficult task for you to build, but it's potentially like way more powerful, way more valuable in the long run. So that guy's, he worked there for a number of years. He's no longer there, but his sort of footprint is sort of like all over, the current AI system that Better uses. And so I think they've been ignored because like Opendoor, like Carvana, or like one of these sort of busted SPACs, they just got left for dead in these last couple of years. And they had to do like a reverse stock split just to keep their stock price above $1 and all this kind of stuff. But it's a very small float in terms of these shares. If you look at their financials, you would think they're losing money because it's sort of looking in the rearview mirror, but it doesn't really reflect the fact that as mortgage rates drop, the volumes for these guys goes up kind of almost exponentially. And they used to just be a direct consumer kind of mortgage provider. They have two other businesses now. One is that they take their mortgage technology that they have been using for their DTC business, and they go out to, like, a lot of people across the country, they get their mortgages from like a one-man band mortgage broker in their town. Well, all those people, they need a sort of a technology back end. And so now Better's providing that sort of, like, they call it a mortgage in the box solution for those people. Mm-hmm. And they also have a whole HELOC business. So it's a matching HELOC business. So basically the play here is that this company was unknown. It's going to be, and it already is, we'll probably find out, I think it's on November 7th, they report their earnings the day after Opendoor. We'll probably see an immediate kind of jump in their business that sort of makes them sort of, they're about to kind of hit profitability much sooner than they've guided to. And as you can expect, like further rate cuts, their business just gets even wildly more profitable, and because they're much more automated than they were 4 years ago during the boom. So I have a very kind of long-term lofty price target of $12,000 a share, even though, which seems kind of crazy. This is a $70 or $80 stock right now. But that's if they fully get back to kind of the volume levels that they were seeing in 2021, assuming that now they've got these three businesses, not just one business. the HELOC business, the mortgage in a box business, this other business. And they will be a much more profitable business now because of AI than they were 4 years ago. So, and, you know, I expect they'll do a stock split before that. I don't think they're going to, you know, become like Berkshire, where they just let this thing run to $12,000 a share. But you know, I love the CEO, this guy Vishal Garg. He's an animal. You know, you want him as a shareholder on your side, fighting for you. He owns 12% of the shares. SoftBank, I think, owns something like 17% of this company. So it's going to come back from the dead, I predict.
I have so many questions about Better here, but I feel like we're, you know, a little strapped for time. So I want to move on to another stock here, another space, one of the, you know, I want to say buzzwordy, but it's not exactly a buzzword, because I think there is some very real value here. Data center plays, data center infrastructure. It's a phrase that we've been hearing for, you know, at least the last couple months. I know a name that you've been interested in has been Cipher Mining, CIFR. Tell the audience a little bit about this play.
Yeah, I think if we think about like Open Door, Better, some of my other stock picks, I always try to find these companies that I hope, you know, in 2, 3, 4 years time can become sort of platform plays, like important kind of significant plays in their particular industry that they're going after. So what's interesting about Cipher is that they're really trying to be a foundational layer of AI. I mean, everyone talks about AI, you know, in terms of NVIDIA and the chips, or a Palantir building the apps on top. But there's got to be somebody powering all those queries when we type into ChatGPT or whatever. And so that obviously that happens at the data center level. And we always hear these announcements from the hyperscalers like Microsoft or Meta, or Google, how they're increasing their CapEx budget every quarter. It seems like they're upping, you know, we're going to spend another 10 billion more than the 50 or 60 billion we spent last quarter, you know, in the next quarter on data centers. But somebody's got to build those things, right? And that requires like buying the land, you know, negotiating whatever the power costs are going to be with a local power authority that you're dealing with wherever you decide to build those data centers. And then you got to construct them, and then you've got to, you know, build them out, buy the chips and so forth. So we don't hear so much about those players until like earlier this year. We heard about a CoreWeave, and they had a very successful IPO. They were up like 4 or 5x from where they IPO'd. But the thing about CoreWeave is they're kind of like a middleman between the hyperscalers. Like they get the contracts from the hyperscalers, and then they have to go out and kind of figure out how they're going to deliver however many gigawatts. And they got to do deals with people that actually own the land and so forth. The thing about Cipher is Cipher's trying to go about what CoreWeave is doing more from like the ground up, where they actually control and own the physical land and properties and have the connections to the power grids, because they think ultimately they're going to be more valuable controlling all those assets rather than a CoreWeave middleman who might get sort of bumped out of the picture over time. And I do think that's what's going to happen. So Cipher is similar to an Iron, you know, similar to a Hut 8, who, you know, those are two other names of you know, that I'm wrong. But the thing about Cipher that's interesting is they're smaller. They've got like 3 gigawatts, which are going to get turned on in the next 12 to 18 months. And, you know, I feel like that's what's going to, you know, be what the metric that people value these companies like Cipher on, is like, how many gigawatts do you have near term that are going to be flipped on, that are energized? And then, you know, what's your pipeline like beyond that in terms of additional gigawatts? Because it's all about gigawatts, you know, for these data centers. Who's got access to them? Because it's like a game of musical chairs. We hear these deals like Nebius. Remember that deal? Like the thing like doubled overnight because they announced one deal with Microsoft for 1 gigawatt data center in New Jersey. So here we have Cipher, who has yet to have that Nebius-like announcement, Microsoft announcement. And they've got 3 gigawatts kind of sitting there. So you can, you know, and the longer time goes on, the value of those deals just goes up and up. And, you know, we have players like Oracle, who's a, you know, partner with OpenAI building this project Stargate. They haven't really announced any big deal. So it's kind of like, You're waiting for these deals to wake up one day, and see the news that Cipher's done some deal with Oracle or Meta or Google. And I'm expecting it could be a doubling or a tripling of Cipher's stock price when we get those kinds of like big mega deals announced. Sometime
Eric,
in the next 6 months.
We'll ask you one more here before we let you go. The chat wants to know, and I did see you tweeting about this one too, BTQ. I don't know anything about this company. Just quickly, maybe tell us about this company, and if you have anything else on your radar.
Sure. BTQ is in the quantum space. So the quantum stocks have gotten a lot of hate especially from the value guys this year, because they've had some incredible runs, especially since Trump got elected last November. They were all kind of left for dead as sort of these busted SPACs that are now like worth $4 or $5 billion. So that you've got the quantum computer names like D-Wave or Rigetti or IonQ. They're actually like trying to build their own quantum computers that are kind of like next generation AI computers. Like they can do things that GPU NVIDIA chips can't, super fast, especially like probably the most interesting things from a criminal perspective is like hacking into crypto wallets or hacking into RSA level security. You got access to government data or sensitive financial data. So what BTQ is doing, which is a little different, is they're in a space called post-quantum cryptography. They're basically trying to build the security to protect against a quantum attack. So it's still years away, and that's what the value guys always get hung up on. Is like none of these companies have significant revenue today, and they say, oh, how can you value these things or whatever? Yeah. It was like $1 billion at the beginning of the year, now it's $4 billion. Well, I mean, I think it does make sense if you just are saying like, well, in 3 or 4 years, if we wake up on one day there's been a quantum attack, how valuable will the companies be that can protect all the crypto wallets around the world to lock down everyone's Bitcoin or Ethereum or whatever. So that's the play with BTQ. I do like the company because they actually have real revenue deals right now. They're small. They're sort of proof of concept type deals, but they've been working in this space for almost 10 years. They've got, a real management team, real technical team behind it. And I think it's sort of like its own little niche. It's not just trying to be another quantum computer company competing against Microsoft and Google, who are also, by the way, IBM, who are trying to build their own quantum computers as well.
Eric Jackson, EMJ Capital. Love the perspective, Eric. It really seems like you're just trying to get a lot ahead of a lot of these trends that a lot of other people are just starting to talk about. Can join us on Pre-Market Prep anytime, sir. Thank you for joining today.
Thanks, guys. Great to be with you.
Thanks so much, Eric.
All right, Triple D.
We did have some breaking news during the Eric interview. Microsoft agrees to new terms with OpenAI worth $135 billion stake. So we know Microsoft obviously has had ownership in this company. So we're getting some more clarification here on, the ownership percentages here. So they're saying they're going to own 27% of OpenAI. Wow. So Microsoft previously had a 32% stake worth $135 billion. So looking at that, I mean, anytime you get OpenAI, and we keep forgetting at Microsoft, when OpenAI had all these, like you think of OpenAI, its own company here now, but Microsoft, this was a Microsoft, obviously Sam Altman was with Microsoft. So, I mean, Microsoft still has ties all in this. And I think this just woke the market up that, hey, yeah, Microsoft still OpenAI are linked together here. And we're seeing it this morning, huge pop for Microsoft, basically igniting the S&P. The S&P was flat on this announcement. The SPY just moved up 0.25% because Microsoft's such a big component. Microsoft now trading up 3.59% here in the pre-market, up 19%. We were just saying how they were sleepy, how they were actually looking decent on the chart. Now everything just changes all of a sudden here. So, into the report. Microsoft reports tomorrow night, but, big time changes here now because now all of a sudden, the stocks moved up $20 here. So obviously people who had calls earlier are pretty happy this morning.
And then one more here before we jump over into the STN extended pre-market prep here. 10 minutes before the open, folks, SMCI shares popped a little bit, kind of selling off here. Press release out from Supermicro, Intel, and Micron announcing collaboration on results for the Stack M3 quantitative trading benchmark. Micron shares not really responding here. Intel shares moving a little bit lower. I don't know if they're responding, but SMCI getting a little bit of pop on this news item from just a few minutes
Also,
ago.
Cameco here, which we haven't got to this morning.
CCJ?
Yeah, we never announced this one. Brookfield partners with the U.S. government on an $80 billion nuclear program, and CCJ is up 16% here this morning. So many things, to mention here this morning. Obviously, URA is a huge component. CCJ is a huge component there. So that's moving here too. I mean, the party just continues for a lot of these AI names. Incredible news.
And the party in Stock Trader Network is going to keep going, folks. Triple D and I are going to jump over into StockTraderNetwork.com room. We'll be kicking around here until the open. We'll get people set up for the open. We'll take you through the open. We do have a good 10 a.m. guest here this morning in STN, Miss Schneider from Market Gauge. We'll check in with Miss, see how she's been doing and Market Gauge has been doing. Let's get over there, folks.